Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me for this segment, we have Cory Klippsten, CEO of Swan Bitcoin, Bhaji Illuminati, CEO of Centrifuge, and Alice Liu, head of research at CoinMarketCap. We're here to discuss how a pro-crypto stance could position the U.S. as a global leader in digital assets, influencing international policy and adoption rates. It is great to have all of you with us. Let's kick it off with a quick background. Cory, we'll start with you. Where does Swan Bitcoin sit within the digital asset ecosystem?
Yeah, so Swan, I would say, is the number one Bitcoin wealth platform for families and businesses in the United States. So we're really focused on the Bitcoin investor that's focused on long-term accumulation of the world's hardest money.
Yeah, and Bhaji, tell us about what you have going on with your firm. And of course, congratulations on your new role as CEO.
Thank you so much. Yeah, Centrifuge is focused on the intersection of TradFi and DeFi. So we provide a tokenization platform to help asset managers tokenize their funds, create more efficient processes on the TradFi side, and then distribute them to on-chain capital markets.
All right. And Alice, your work at CoinMarketCap.
Sure. So CoinMarketCap is the crypto data provider, and we give pricing data together with trading data and other tools and platforms to help with the crypto information discovery. And my work at CMC covers the research of the market side.
Well, let's talk about that, Alice, and what you're seeing with crypto regulation. It seems as if the mood in the US certainly did shift in 2024 when it became, really on the forefront of the national stage, and what we're seeing with the appointments and what has been discussed in policy conversation around leadership in the US while it continues to innovate within the crypto space.
Yeah, sure. A very important change that we saw this year is for sure with the Trump inauguration happened on the 20th. And then we can see a lot of the crypto related regulations are shifting towards a more friendly side for crypto. And a few things actually. First thing is we have seen David's announcements about stablecoin related regulations. And secondly, I think the BTC potentially used as a reserve asset is going to give a big boost to the market. And a few interesting things. Data points to accompany this. First thing is we are seeing the ETF net inflows since the 20th of Jan to be around 1.5 billion USD net inflows into BTC via the institutional side. So definitely we're seeing the money fund flows that is giving support to that statement. And second thing is BTC dominance for our market right now is steadily above 60%. And as of today, it's 61% even. So definitely we are deep in the BTC season. And that gives us the view of how potentially the institutional buy-in and nation states buy-in to BTC for this industry.
Right. And Cory, what can you tell us about the recent appointments and the impact that it could potentially have on the crypto space in the US?
Yeah, I think broadly this is all coming from kind of the non-Bitcoin crypto side of the house that's been seeking, in a generous framing, regulatory clarity, and probably a less generous framing, maybe regulatory capture. But either way, it was successful, and it was, as an industry, kind of the crypto folks were the largest donors in the election cycle and have been able to kind of flood the ranks of these appointments with crypto-friendly people or even crypto-native executives that formerly worked at different crypto companies over the past few years. So, I think not unlike, here in Los Angeles where Bhaji and I live, the Scientologists don't pay real estate tax because they flooded the courts with cases and complaints and were able to get designated as a religion. I think that's kind of what you're seeing is kind of the completion of a long effort at regulatory capture by the crypto industry. And I think it's been very successful.
Mm-hmm. Bhaji, let's talk more about that where it's not so Bitcoin specific, because when you start to think about real world assets and tokenization, it starts to bring in what sounds more familiar to the TradFi space. We're seeing this integration here, right? And I think that's important too when you think about regulatory framework moving forward and the familiarity within the institutional space to help adoption and foster it and continue to grow.
Yeah, absolutely. And I mean, what we've been seeing historically is a regulation by enforcement and not regulatory clarity. And what that means is that a lot of these large institutions, they're just afraid to move and do anything meaningfully in the space because they don't want to get come after and they don't want to unknowingly break any rules. So with this clarity, with a recognition that you will be able to be banked in the United States, that stablecoins will be pushed forward as a key driver of adoption of greater financial technologies, and that will be intended to grow US Treasuries with a new broker-dealer license purpose-built for crypto. A lot of these building blocks are now coming into place where there is confidence from the asset managers that we're working with, banks, financial institutions, that they will be empowered to innovate and encouraged to do that, and that those the work that they do will be recognized and rewarded, and we'll start to see a greater integration between the technology into the financial systems and the processes that they use today.
Right. And Bhaji, I think it's worth noting that we have to be aware of the ethical implications, where you want to make sure that there is clear framework and that market integrity is supported, and that perhaps ventures within this framework are not superseding the integrity and the transparency of the market. A lot of work and advocacy has went into this space to make sure that doesn't happen. What are some of the ethical implications that you are thinking about?
Well, I personally haven't likened the work we're doing to Scientology, so that gives me some new thought starters, Cory. Appreciate that. But on the ethical side, I mean, we're really focused. Centrifuge specifically is focused on education. We've done a lot of work to create communities and coalitions and various events for tokenization and real world assets. And going forward, we want to ensure that there's deep understanding of the way that this technology should be used for good, to democratize access for investments globally, to create better transparency, to create better sovereign ownership over the funds and the work that's being done. So I think with this technology comes just greater opportunity for more ethical practices.
Right. And Cory, that's something that you discussed when you want to prevent the Wild West within the crypto environment, having coined the term scambling. Tell us more about that. What has you concerned there?
Yeah, so it's a word that I couldn't believe didn't already exist. Seems like it should have for quite some time, but it's a combination of scamming and gambling, and I think that's what we've seen quite an explosion. It wasn't actually intentional that I published the definition on election day and then posted the article on inauguration day. It just kind of worked out that way. But it does seem like we're seeing kind of the end game and kind of natural end result of essentially a new global gambling complex. What makes it scambling is that the rules of the game are not transparent and there's no regulation, right? So there's a big difference between being in Vegas and you kind of know what the odds are, and there's gaming commissions and different things you have to get approved to run a casino and things like that. Whereas I think what you're seeing with things like, even take like a Melania coin, where they published a website and said there was going to be a certain token distribution, but then they actually lied and ripped everybody's faces off and kind of got away with a bunch of ill-gotten gains. And there's no recourse because these things remain gray area. And my view after watching this for the last 7-8 years is that it is not the desire of most in the crypto space to be regulated. They actually strongly prefer to be in the gray area and be outside the reach of regulation. And that's kind of the point, because that's where the insiders can continue to rip everybody's faces off and make off with their ill-gotten gains.
Yeah, when it happened right after just prior to the inauguration, my heart almost sank because of all the work that's been done to allay a lot of those fears that people have, that it is the wild, wild west. So, hopefully we could take from those types of blips on the radar and use that as a silver lining in terms of how we're thinking about building framework out, and as a catalyst to build it out. Because Alice, honestly, it's great that we're bringing more products to market and that helps to improve institutional adoption. But I think the big catalyst is when there is a framework within the US regulatory and legislative system, because that's going to speed up the adoption. You want to understand what your operating environment is and that you're adhering to it in a compliant way.
Yeah, of course. And I think it takes steps when it comes to it, especially that we're saying everyone is anticipating, for example, it starts with stablecoin regulations that we saw US is moving forward with it. Number two is probably going to be BTC reserve related. Number three, and just touching upon what Cory mentioned, with the whole saga with Libra, the token that is related to Argentina president, and a lot of the recent developments we're seeing in the meme coin space, there's a lot of debate on what crypto should be and what the whole industry should be and what kind of opportunities we should provide for the retail investors. And the regulation side is going to come in different phases. As I mentioned, stablecoin probably first, and then DeFi related stuff, RWA related stuff. And the meme coins, that side, the casino side of crypto, is going to be impacted a bit later, I think. But the regulators are indeed having their eyes on how the event is developing now, with a lot of the high profile things such as Libra happening.
Yeah, well, I mean, Cory, you can make the argument too. There are penny stocks. There are things in traditional asset classes, like equities as an example, where I think you're always gonna, it's human nature almost to find those loopholes and see how much you can get away with. I don't think this is just specific to what's happening in the digital asset space and memes. I think there's always going to be that search for, the perceived edge, whether right or wrong.
Yeah, they still have disclosure requirements, and they're still under the SEC, and there's still regulations, and they still go after the bad guys for breaking rules, even in the world of OTC stocks and penny stocks and pink sheets. So I think that's the big dramatic difference, is that it actually isn't the Wild West. People do get away with a lot of things, and there are insider trading things, but the bad guys often do get punished in the world of penny stock pump and dumps if they've actually done something wrong. So I think that's the big difference.
Because the framework is there. At least you have some sort of backdrop.
Yeah, I would add one thing, which I think is kind of an interesting, even higher level framework for how I've been thinking about these developments. And it's that if you think of the way that the internet rollout and broadband was essentially, largely financed by the porn industry because they had the biggest needs for bandwidth, it's very possible that we do see an upgrade in the exchange venues, and something like Coinbase with their infrastructure ends up being a place where a lot of, I think what the crypto industry will call real world assets, but it'll just be stocks, and it'll be basically a way for all of these trapped unicorns and late stage venture companies that have no way to IPO and no way to get out. I actually think that it's very likely that Andreessen Horowitz and the others that actually have more bags in the non-crypto VC space than they even do in crypto have been kind of building up the crypto exchange world, in particular Coinbase, with a view to having that be the exit liquidity and be able to essentially pump meme stocks for all their trapped private unicorns.
Let's talk about, I'm sorry, go ahead.
I think that's a very interesting point Cory made about the late stage unicorns going to crypto via the RWA route. I have to say, now with the crypto industry itself having this high FDV, low liquidity problem, I don't know how this development might add some challenges to it as well.
Yeah, and actually that was a question I was going to lead into with you, Alice. When we think about capital forms of alternative forms of capital formation or alternative ways of being able to source liquidity, I think Cory makes a great point about that. And I was just curious to see if there was anything reflective in the data that you see at CMC that is suggestive of perhaps, leveraging crypto venues for these liquidity events.
Yeah, sure. So I would say if you look across all the RWA sector in crypto right now, as we speak, the total market cap is around 58 billion USD, and that is nothing compared with the magnitude of the potential market there is. So RWA will still stay as a very important narrative for us. But in terms of how the exchanges would like how this would be done via the exchanges route, I think that's very early stage yet to be discovered. But a lot of the new projects that we're seeing in RWA coming up is providing potential solutions to that.
Yeah. And Bhaji, anything with tariffs and the uncertainty around there that could potentially impact the crypto space, short or long term?
Yeah, and just one note on the exit liquidity. I think as long as there's systems in place where the retail audience can see upside, then it's not necessarily a bad thing for secondary markets to be created from these private companies and from these equity solutions and for new RWAs to come on chain. So it could just be a distribution of wealth from some of the large VCs who got in early to more retail and a broader distribution of potential owners within these projects. On the tariffs, it's interesting. I mean, ultimately, what we want to see is uncorrelated crypto returns and cycles based on what's happening in the US economy. We didn't see that right away, but I think just with uncertainty in the economy will come greater volatility within all capital markets. And we saw that in crypto, and we're starting to see some stability. But what we should work towards is that those are uncorrelated to the traditional stock market.
Yeah. And in the last few minutes here, let's think about your outlook for a moment, Cory. When do you think that we will see a framework, or what are the risks to that thesis? Or do you think that it's going to be the most proactive that we've seen in administrations to get execution on the policy that they're discussing?
My view is it's going to go a lot slower than people think or hope, just because of the nature of election cycles in the USA. You basically have till about November this year to really get things done in the second administration. He can't be president again. And so you'll basically have a lot of pressures from reps and senators seeking re-election starting in November, December this year. And so anything you really want to push through that's kind of a pet project, or that is paying back an industry that's seeking regulatory capture and kind of pushing their own thing on the public, you basically have this year to get it done, and people are kind of lazy in the summer. So it's really like your push is basically now through maybe mid-June if you really want to make headway on kind of new, and that's it for the Trump administration's second term. I think that's it. It's basically this year if you want to get something done. I don't expect a ton of movement on a lot of these things. I think a lot of it was just kind of a shift in the tenor, and some of these administrative groups, whether it's SEC or, the banks. And it's just like they have these decisions where they can follow this side of the line or that side of the line. And it's not based on rules. It's just kind of based on sentiment. And I think because everybody's kind of bullish on Bitcoin and crypto, you're seeing everything kind of open up. And I think probably the most consequential change so far was actually just the unenforcement, and I guess soon probably the rollback of SAB 121, and just letting banks get into crypto custody, I think, is going to be by far the largest impact of all of this. I don't think we have any shot at getting rid of cap gains tax just for Bitcoin. That doesn't really make any sense, even though it would be amazing. It would be kind of unfair to other asset classes, and I don't see it happening. And I don't see us having a Bitcoin strategic reserve. I do see potentially a sovereign wealth fund coming and having Bitcoin potentially in that, but you're also just going to have so much grift and so much lobbying from all kinds of crappy things trying to get put in there anyway, that the effect of it is going to be just wildly diluted by the time it happens, and it'll just be some iBit shares or something that go in there.
Mm-hmm. And Alice, what's your perspective as you think about the near and longer term evolution of this framework?
Yeah, sure. So I agree with what Cory mentioned about this potentially taking steps, but my view is it's a bit more optimistic on the BTC reserve side. And the reason for that is we are seeing some of the states started to move forward with that progress, but also this is going to be almost an arm race between different countries. And what we're seeing developing Asia, for example, in Hong Kong, we've seen there has been regulation suggestion put forward to say that using BTC as its reserve asset, and some other countries are moving forward with this as well. So I think US, in a sense, is getting a bit of pressure globally to say, join the race, or you might be risk of left behind. That's the number one thing. Number two thing, when it comes to asset allocation, I think I definitely agree that potentially if sovereign wealth fund can start allocating into BTC, that would be a really good step forward for us. And there are different ways to get that done, of course. And with both access via ETF, that's some other ways to do it. And we're seeing a more developed institutional market for that. That would definitely be a very welcomed step forward.
All right. And to wrap up here, Bhaji, what are your thoughts in terms of shorter term and longer term execution on the framework here?
Yeah, so agreed that bank custody for digital assets will be a huge push. Stablecoin legislation, I do think, will pass. And then a custom broker-dealer license for crypto companies. I think those are the three big things we can expect this year. And then probably not much thereafter. I also think there will be greater understanding of the difference between cryptocurrencies and blockchain technology. I know this has been a narrative since the very beginning, but traditional markets still don't truly understand that. So recognition of the value of a store of value currency, and then the differentiation of what blockchain can do in some of these financial projects that we're seeing on Wall Street.
Yeah, I would agree with you. It's an important distinction to make. Appreciate all of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.
Thank you.